G'day and welcome to another episode of SidekickTV. Today I'm joined by my original video co-host, Joe Laing, my buddy.
Hey, Rick.
G'day, good to have you back on video. It's been quite a while, hasn't it?
It's been a wee while, yeah.
So,
good to be back.
Yeah, cheers. Look, a couple of years ago we did a few videos back on, we were talking about property. Joe's now back in Christchurch and back in the game. But Joe, why don't you give us a quick update on what you've been up to?
Yeah, absolutely. So since I last saw you, Rick, probably anyone that owns a house is going to be quite a happy person at the moment. We've obviously seen some changes there in property values of late. But yeah, I back in Christchurch now working as a property consultant for an investment company. So dealing with developers and investors. So looking to source property throughout New Zealand and then present that to our clients who are signing up, as I mentioned, for investment purposes, for I guess the purposes of setting up for their retirement with wealth management.
Awesome, cool. And look, we hashed out a bit of a chat because obviously property is hot on everybody's lips at the moment.
Absolutely.
Can you tell me, Joe, like what are you seeing? What's going on in housing at the moment?
Yeah, the conversation that I'm probably having with most people around the country, as far as your developers go, is just that absolute lack of available land and available stock. So the stock levels are really historically low at the moment. I believe there was a stat that was out recently there, the lowest levels for almost 80 years when records began. So we certainly know that there's not a huge amount there and available. So the developers are having a bit of a problem actually getting a hold of land as well. So that's probably the biggest issue at the moment, or the biggest thing that we're finding is just that significant lack of availability throughout the country, really. So I think there was a stat released recently where there was 80,000 properties less than what we actually need to fill that demand. Yeah. So one or two.
Yeah. And so that's just pumping up the price of the stuff that is available.
Yeah, absolutely. So the prices are going up. I mean, that's combined with a few other factors, obviously at the moment, low interest rates, etc. But certainly that lack of stock creates demand, and that's going to push your prices up. Developers, I guess, can put the price up because the people are going to buy them, and then that demand with existing stock as well is obviously pumping up prices at auctions and other sales.
Yeah. Now, obviously, there's been a lot of changes going on. So
Yes.
we're aware of changes in government, changes with the Reserve Bank, changes then at bank level. Can you give me a bit of a run through as to what you're seeing there and the effects of that?
Yeah, definitely. So obviously the latest ones that came out in April regarding the tax changes kind of worried a lot of investors because they didn't really know what that was going to mean. There was initial conversations regarding, the new builds would be exempt, and I believe you and Cam did a really good video on that. Since then, there's been some more information released from that consultation phase, and it does look like, the new builds are going to be exempt, which is hopefully going to, put investors towards looking to purchase new builds, which effectively should help with that stock problem we've got. I guess the problem of not having stock will stay there for a while, particularly if other changes come into play, like the one recently yesterday that Grant Robertson mentioned with the Reserve Bank of looking to do the loan to income ratios. So they have suggested that probably won't come into play until they see what these new changes of the tax laws are going to do, whether that's going to have an effect. But I guess me personally, I deal with only people who are buying turnkey and new properties. So what we'll probably see is actually just an increase in clients coming on, and perhaps even actually a little bit more of a difficulty getting stock because lots of investors may be looking towards new builds as the only way to go.
Yeah.
Those that are maybe not looking commercially.
It might change the makeup of an investor as well, mightn't it? I know that within your organisation you'll work for some really high income individuals. Fantastic news for them because they'll have just all of their competition will have just fallen out of the market.
Yeah, well, that's it. I mean, if you're in a position where you can afford to do it without much help from the bank, then this is going to be great, really, isn't it, for you? So it effectively, may make the rich richer, but I don't know if that's entirely what the Labour government were trying to do with some of the changes they brought in, but there we go. So it's going to be really interesting, I think, to see how it goes. I mean, in an essence, if you break it down, you look at what they've done, some of the changes that have been made, I think, are actually a good thing. I think, not having that tax exemption on existing stock, so that frees up some of that for first home buyers and mum and dad buyers is actually a good thing.
And it's also really good for the economy, because it means that actually what we're doing is we're building houses, developing land. There are lots of trades, there are lots of industries that grow through that. But when Kiwis are selling houses to Kiwis, it's great for real estate agents. Not many other people. So if we're just flipping over existing stock, I agree entirely with that. That if we can really push some economic growth through new builds for houses that ultimately we really need as well.
Absolutely. And I think, look, as much stick as anyone to give to whatever government's in place at the time, at the end of the day they do need support and help from developers to build properties, because they're just simply not going to be able to build them all themselves. They can try, but we know it's not ever going to happen. So they need that to be financed by the developers and effectively from the investors buying those properties. So I'd be really interested to see in a year, even 2 years' time, where we're sitting with things and what those levels and those numbers are looking like. And as long as the investors are encouraged to look at new builds still, then I think it'll be good. But if, again, changes are brought in which is going to limit how much they can borrow and how much they can afford and things, then effectively it's going to be counterproductive to the other measures.
It will slow what fundamentally we really need. Pardon me. Sorry. And lastly, so what are your thoughts then on the market? So current place market and where you might see that tracking.
Yeah, absolutely. So again, starting on that lack of land and lack of stock being available, the reality of that is that's probably not going to change anytime soon. The interest rates are due to go up next year, although not significantly. There will be an increase there that will affect people's affordability, so that might take a few people out of the market. The changes, obviously, that we've already spoken about may affect a few things as well. I think probably the prediction of the growth going from 17% to 0.9% is a little bit optimistic, but I certainly don't think that the current growth we're seeing is sustainable. Therefore, I do feel there will be a slowing down of that growth. May, for instance, was another record month for median sale prices of 17%, and that's month-on-month record for that year. So, there's been large growth that we've seen, which is why I don't feel like it could be sustainable. There's areas that the house prices have lifted 50% in the last year. That's significant. So, but that being said, there's still really high demand out there. There was a release of a subdivision out in Rolleston on Monday for sections, and the website crashed under the amount of demand that was there, and they sold out within minutes. So there's a lot of demand. It will take a while for that to kind of calm down and slow down a wee bit.
And the thing is, these the fundamental issues with high house prices at the moment are solved with long-term solutions, which are around releasing land and being able to develop it for housing. So it won't fix tomorrow.
No,
we know that.
No, and I think as well with that, that comes down to actually the nuts and bolts of getting that land and actually processing, the consents a wee bit quicker, so that the developers can start building on it quicker as well. So there's a few different factors that are involved with actually, how we can get that happening nice and quick. And I did hear through the grapevine that the Christchurch Council are potentially looking to trial something in the near future with subdivisions, where if they've got a property that's been approved by a developer, and that developer is building, say, 10 of the same kind of properties within the subdivision, they're looking at how they can actually fast track those approvals and go, well, we've approved one, let's just approve the other 9. So again, that's through the grapevine. I'm not sure of the exact details there, but I think things like that will help to quicken that process, which in essence will enable the developers to build quicker and the stock to be produced at a quicker rate. Yeah,
perfect. Yeah, compliance will never speed up a project, will it?
No,
so if we can reduce it. Yeah, perfect. Yeah. So, over the years we've spoken with many property investors, people looking to buy their first home, independent business owners that want to try and get on the property ladder. One bit of the conversation over the last few years has been, the regulations are changing so much, I just want to get out of property. The fact that they've just now made, $100,000 per house is probably making them think, I'll stick in it for a bit longer.
Yeah.
What are you seeing, someone that's looking to build wealth through property now?
Yep.
What's the kind of dialogue you're having with them?
Yeah, so I think most people who are looking to build wealth through property are typically doing it for the long term. There are, of course, the sort of flipper investors who will buy something, add value to it, and then sell it, and obviously take the gain. But most people are looking in the long term, so your 10 plus years. So I think everyone that is looking there has that understanding that there will be costs along the way, but eventually it's going to, the benefit of doing it will outweigh any whatever cost of the kind of the maintenance or the tax you have to pay on the house, because firstly, after 10 years for existing stock, the bright line test is not there. After 5 years of new build, it's gone. So if you're looking at it for more than 10 years, there's the value of the property at a very conservative 4% increase on year is going to be very beneficial to you. So the conversation really is, if you're looking to do it, it is a long-term thing. It is not really a short-term thing. If you're doing that, probably 80% of the time, it's not going to be actually successful, but 20%, hey, maybe you might make a quick buck.
Yeah. And the other thing is as well, as though we do kind of all anticipate that house prices will go up. It's what's traditionally happened, but actually so do rents.
Yeah.
And our most successful property investors hold their properties for a really long time and get to a point where they've got really good passive income from them.
Yeah, absolutely. And talking to some property managers in Christchurch and in Hamilton, prediction is, unfortunately for renters, that the rent's probably going to go up, and that's on the back of the changes. But also, to be honest with you, Christchurch hasn't had a significant increase in some rents for a wee while, and Hamilton's the same. And because the property prices are increasing, the rents kind of do need to keep up with them. So I think there will be an increase in rents. So good for investors, probably not so much for some people renting, but I guess that's just the way of the world.
Yeah, no, thank you very much. So you're available, so if people are going to be wanting to talk to you about property investment and things like that, so if will post your details in the comments for this video.
Yeah, absolutely. So we're welcome, happy to take on clients, and there's a process that's involved obviously with that, but yeah, certainly if
like finding the house.
Finding the house is the first, is a very important one. And look, to be honest with you, we've got some good stock out there at the moment around the country, as I mentioned. We do throughout New Zealand, so Queenstown, Hamilton, Christchurch, Auckland, Wellington, etc. The main sort of centres we focus on mostly.
Cool, great. Hey, thank you.
No
Great to be on camera with you again.
Yeah, it's nice to see you again. Cheers.
Cheers.